and that, of course, you heard the Prime Minister staking NDA's victory.
Okay, Aisha, I mean, the politically, what was expected has not really translated into reality as far as market positioning is concerned. But in terms of where the picture was at 2 o'clock yesterday versus where we are right now, there is a lot of clarity that it is going to be an NDA government and Prime Minister Modi is back in the driving seat. So really from a positioning standpoint and from a market standpoint, there is clarity that Abki Baar coalition Sarkaar, but Prime Minister Modi will be the Prime Minister for the third term. So that in a sense is the biggest headline for markets. Now let's address the market. What happened yesterday? What happened next? Are we likely to stop falling? Point number one. Are we likely to fall further? And are we in for a V-shaped rally? And let's put things in context. So what changes in the short term? I guess the euphoric move in the market, what we've seen in some of the so-called policy-related stocks and the excesses which got created in the market now in the near term, I think that trend is over. Let's look at it. The short term, what changes? The euphoric move in the market, I think will get over. You may see markets start settling as more and more clarity emerges. Now focus will shift on cabinet, the 100-day agenda. Markets will now wait for action rather than announcement. And in the meanwhile, while this chop and churn actually will happen, you may actually see defensives, they may start outperforming. You may see tilt towards FMCG, and you may actually see an underperformance in some of those over-bloated, Humpty Dumpty, small and mid-cap stocks which were rising because of participation but no underlying bent. So I think in the short term, that is what will happen. You will also find buyers at lower levels in banks because that's where I think the growth is intact. So what may actually happen, Aisha, is that markets will now wait for one chapter after another chapter. Rather than announcement, it would be action. Yeah. The assumptions that, okay.
And clear outcome that they'll focus on.
Exactly. So that is where I think the short term will settle. Then there is a technical aspect in it. I mean, what happens if FIs continue to sell more? What happens if there is margin selling more? I think that will settle in a day or so. You have to realize that it is not for the first time we've had a coalition government. The history of Indian markets tells us that in last 20 years, even with coalition government, markets have done reasonably well in the last decade or even previous before this. So I don't think from that narrative, markets would be nervous. The problem what happened yesterday was that the excesses in the market were high. We had a huge Monday which raised the expectation high, and that in a sense coincided with a lot of margin unwinding and that big sell, FI selling. India is still growing. The center, I mean, today if you think of the combination of coalition parties, these are regional parties who are interested in their regions. They are unlikely to have a lot of intervention in the foreign policy. What will happen to defense? Nobody will say no to that. So a lot of good things will continue.
And the Prime Minister pretty much said that in his address as well yesterday, that policy continuity is here to stay, and I don't think that's something that the markets should worry about. Valuations, FIIs, that's a separate ball game altogether.
Yeah. So the two factors which will decide the market in the short term would be where valuations will adjust and what happens to the selling and what happens to the technical aspect. I think valuations, if markets fall another 5-10% from here, if they do, which I'm not so sure if they will, I think valuations will start becoming attractive. You've seen a gut-wrenching fall yesterday in PSUs. And if FIs, they settle, I think market in a sense will start settling. So the euphoric move in the market is over. Now from momentum, the market will move into what is called as patience. So what changes in the medium term? We discussed long term. Let's look at medium term. By medium term, so I'm saying that don't look at a 2 to 3 year, don't judge the market for next 2 or 3 days.
But challenge, given just, the fact that the markets perhaps to a certain extent got it so wrong in terms of, you said that euphoric move that we witnessed, would the advice be don't catch a falling knife, just wait for things to settle, as you said, a little bit of time perhaps before actually taking any decisive direction in the
See, you'll not be able to catch the bottom. What you can assume that where the changes are permanent, where the risk appetite, which is the P multiple changes, and where there is a technical sell-off. So what will not change? The internals of India growth story. What may change is the P multiple which some of the so-called policy stocks are enjoying. What may change at a global level, FIs which were in a sense forced to, venture funds and all those things will change. But what will not change is the fact that you're growing at 8%, private capex is robust, India is growing in terms of the SIP culture, private banks are in a good shape, defense, railways, the expenditure cycle has started, those things will not change. So I think from that standpoint, if you look at the medium term, the capex, the SIP, I think all those aspects would be there. The problem for India was not growth. The problem for India was valuations. And those valuations, I think, unfortunately, they've got corrected in a very hard manner. Nobody wants to see, nobody likes when portfolios go down by 5, 10, 15, 20%. So that's the way it is. That's the way our markets move. They will act and they will overreact. On Monday, they reacted, and on Tuesday, again, they overreact.